Hello, Dan.
Good morning, Trevor.
Morning. Here I am checking in a minute to go.
Yeah, I'm just going to make you the presenter now, Trevor.
Okay.
Okay, you should be able to control your screen. Okay. We're looking at the Euro chart.
Yeah.
Weekly.
Yeah.
Okie dokie. Well, I make it 9 o'clock, Trevor. I think we can get started if you're ready.
Okay, I'm ready.
Okay, hello everyone and welcome to another technical analysis webinar with Trevor Neil. Thank you for joining us. As always, we'll aim to get through everything in approximately 30 minutes. If you have any questions for Trevor, you can ask them in the questions tab of the GoToWebinar control panel and I'll pass those on to him. We'd remind you that this webinar will be posted to our YouTube channel in a few hours time. So if you'd like to watch it again, you can do so there. And we'd love it if you also subscribe to our channel and click on the bell to get notified. The webinar handouts can be downloaded from the handouts tab of the control panel also. If you're having any problems locating or downloading them, please just let me know in the questions tab and I'll send you a link. The first is a guide to different technical terms and indicators that Trevor uses when he's doing the webinar. And the second is a CFD guide, which details all the different products we offer at FXChoice. If you're watching this on YouTube, these handouts will be available in the description box below the video. Please just click show more and you'll be able to see them. For those of you who don't know Trevor, he has over 40 years experience as a technical analyst and trader and was global head of technical analysis at Bloomberg. So Trevor, without further ado, over to you. What do we have this week?
Okay, well, we've got a pretty mixed picture, in fact, divergent picture in the currencies versus the dollar, and I want to show you that. And also, we've got a clear message in the precious metals, in the gold and silver, and I want to talk to you about that. And also, of course, we've got a fantastic bull market in the stock indices, but which is the one which has got the strongest trend. We'll talk about that. But please, any of you that have got any questions, please put them in the chat box to Dan, or any securities that you want me to cover, apart from the ones that you know I'm going to cover, in the currencies and the precious metal and the oil and the indices and the cryptos as well. But anything you want me to cover and anything you want any clarification of, or if you disagree with me, you know, this is a subjective business we're in here, and I definitely know that I don't know everything, and I'm very keen to have an interaction. So let us start by looking at the relative rotation graph of, and I don't know why all the currencies have whizzed off to the off the screen there, but this, for any of you that have not seen this before, this is a very interesting way of displaying data comparatively. In the crosshair in the middle here is the US dollar. Anything left of that is weaker than the US dollar. Anything right of it is stronger. You can see that all the G10 currencies are on the left, so the dollar is stronger than every one, but the direction is not the same. Hold on a second. There is not the same in them all. There were a Norwegian crown over there. It's, in fact, if you look at it, some are heading this way and here, and then some of them are heading that way. This one heading northeast and this one heading southwest. The message of that is that going west means it's getting weaker versus the dollar. Going east, like the Japanese yen, here we have the Swiss franc, here we have the pound, here we have the euro. Heading east are improving against the US dollar, and heading north, so it's a northeasterly direction, means with positive momentum. So that's good. So improving with positive momentum in their relative performance. So the situation may be changing, in that and what is clear already is that we've got divergence in the direction and of the trend of the currencies. We've got some like the Norwegian crown, the Australian dollar, the Canadian dollar heading southwest, so getting worse against the dollar, looking like going to get more worse, if that's not too bad English. And then on the other side, we've got the Japanese yen improving, we've got the pound improving, we've got the euro improving. So we've got quite a lot of stark difference in the trends of the currency versus the dollar. So pairing off, for example, yen, Norwegian crown might be a good pairing, not one that would be entirely obvious to many people. So let's look at the absolute graphs, and we'll start first of all with the euro. Remember, the euro is improving versus the US dollar. So we've got this pattern here, high, higher high, lower high. We're very important level here at 117.70 currently, because this potentially is the neckline of a head and shoulders top. High, higher high, lower high, the low in between the left shoulder and the head, and the right shoulder is the neckline. I've extended that there. So far it's holding. In fact, it's rejecting encouragingly. So this is a weekly pattern. This is a weekly chart. It's a big picture, but that's the threat that we're looking at. In the MACD, the weekly is negative. On the daily chart here, we've got short-term bullish message, shorter-term bullish message. We've come down here. Don't forget, this is the potential right shoulder, but we've got a low and a lower low, and this is the move towards the neckline. But we've got a bullish divergence in it here, and the MACD has crossed here. So this looks as though, in terms of the daily chart, it's putting in a bottom here. It's finding support. The MACD is looking good, but a break of the 119.50 level here should mean that we can have a relatively easy frictionless move up to 121, where a lot of resistance comes in here. So in this perspective, looks as though the threat to the neckline is not going to materialize, and we're going to rally further. So we must keep an eye on it, but of course be very vigilant that that neckline does not break down, because the implications of that are a big move here. We would measure from the head to the neckline, project that downwards, and that would take us right down here to 112. So we don't even want to contemplate that. Let's look at the pound, other one we like, versus the dollar. And again, we're on once again on the weekly chart. A, B, C here. D is right up here at 146. So that's the projection, taking this move from A to B, adding it to C, gives us 146. So we've talked about this a lot. Breaking through the 133 level was very important, and released the energy for hopefully an attack on that. We have lost quite a lot of momentum, higher high, lower high on the MACD here, and it is currently negative in the weekly chart. But you know, the big long-term picture is still bullish. So how's it looking, if you like, the short-term picture? Well, here we've got a bullish divergence formed. So low, lower low, low, higher low, MACD crossing right now. So for the period of a week or two ahead, the projection is that we should start to move up in the pound. The key level to break would be the 140 level, of course. Got quite a lot of resistance at 141.50 and up to 142 there, quite close by. But it does look as though the pound is going to steady up against the dollar. And then the other one which was looking good against the dollar was the Swiss franc, the normal sort of taking back its role as a reserve currency. Of course, improving Swiss franc means lower on this chart. And what we've got here, and this is the daily chart, let me show you the weekly first. Here we have this long down move, which is strengthening of the Swiss franc, break of the downtrend, pullback, now rally, and now weakening dollar again, looking like coming back to test support centered on 90 cents here. So turning over, weakening, we expect here. And so here is the consolidation that I think we're moving out of, and the move from there to 90 itself, just a little bit above 90. There's not much to resistance for the Swiss franc, support for the US dollar in between here and there. So I think that we can make that move relatively easily, and that's maybe the feature of the week. So so that's the sort of review of the ones that are doing better than the dollar. Now let's look at the ones that are doing worse than the dollar. So let's go first of all to the Canadian dollar. Now, Canadian dollar, we loved for a long, long time. We liked for outperformance of the dollar, but the picture has really changed a lot for it. So that's there. Moving down there was a Canadian dollar outperformance, but I think that we put in a very significant bottom there for the US dollar, and we've turned up here. And this pattern, I think, is this cup and handle that we were talking about last week. This is a rather rare. But it's when it happens, it is rather reliable, significant bottom pattern. So here it is, this curve shape here, that's the cup, and then this is the handle, and I think we're breaking up from the handle. Breaking up, that's down for the Canadian dollar. And so last week we were talking about that. We had to break the 125 level. It is a bit hesitant at that point, but it is looking good on the RSI and the MACD at this point here for it to continue up. So I would expect the Canadian dollar to continue to lead the currencies, the weak currencies against the US dollar. That's a big change from how it was before. Also, a big change from how it was before, or what we've been used to for a long time, is the Norwegian crown leading the weakness against the dollar. So here again, we've got a bottoming pattern in here and threatening to break up in the US dollar here. And the MACD is already positive, but this 880 level here that we're challenging here is very, 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 very multi-year significant level, and this potentially could release a lot of energy, upward dollar energy here. So moving up, pull back, up, pull back. I think we're going to have another leg higher and continue to push on up here. Not so attractive as a vehicle as the Canadian dollar, because we've got much more resistance there. So I did miss out the Japanese yen. Just to remind you, on the relative rotation graph, this is where the Japanese yen was. It is the strongest versus the dollar, and it's moving purposefully northeasterly direction. And sorry, I missed that out, so that should have been in that group. And so here is the weekly chart of the yen. Very, very significant resistance from 2020, these two tops here. And then I think, you know, really these two tops here are also going to be very difficult for the market to break up. So we're at a very significant resistance level here, a level that it can turn down from very, very easy. The MACD is threatening to cross that, turn down, and we've broken this rising channel here. You see here, we've broken down through it very emphatically, retesting it now. I wouldn't be surprised to see this week this being moving down quite strongly here. The shorter term indicators are all very negative. I think this is a retest of the break itself, so that fall that we started last week will resume. Okay, so now looking at the cryptocurrency, anybody got any?
Trevor, yes, we do. We have a request to take a look at sterling yen.
Sterling yen, okay. So we had both of those looking like improving against the dollar, the yen more so. So this is sterling yen, and so this drifting as it is means the pound drifting versus the yen, and that's what we would expect from the RRG chart. So let's go to the weekly firstly. So we had identified the high, higher high, high, lower high, a bit of a warning, you know, not a bit of a warning, a very, very loud warning. High, higher high, higher high, lower high. So all these highs matched, and then we get this one here, which is not matched, and that was a significant warning, potentially a top. in that, and we've started to drift here, and it's looking quite negative, coming back towards support. 150, the round number there, but really 149 is the level that must hold if it's going to maintain its the pound's outperformance of the Japanese yen in a long-term perspective. But it does look very heavy and look as though it's turning down here, and here the trend is down. The MACD shows us that the RSI's got lower highs across it. I think that it is turning down. So as the RRG showed us, you know, the Japanese yen is furthest to the right. It's the better performer compared to the pound. The pound's okay with the euro too and the Swiss franc too, but the Japanese yen is further to the right, and so it's preferable. And we see that in this chart here, the pound drifting against the yen there. So better in the yen than in the pound. Okay, any other questions, Dan? I hope that.
No, not on that front. No.
Okay.
Thank you.
All right. Let's go to the cryptos now. So here is the US dollar. Here's Ethereum to the right now of that. I think we're showing too much data there. Let's just go back. Show one. So that's Friday, Thursday, Wednesday, Tuesday, Monday. So that's the journey of the week. Bitcoin is underperforming the dollar. Litecoin, if you like, worse than the dollar. But really, they're all quite close to the middle here, which means they're moving with the dollar. And that's really the picture that we see, is actually developing ranges in all of them. I'll go through them very quickly, all three of them, because they've got a very similar chart. So first of all, Bitcoin, if you will be good enough to come up. Here it is. And so we've got this horizontal just above 39,500, 39,500 area here at the top. The bottom of the range, 30,000, the big round number, moving sideways in the range, and it's in the middle of the range itself, maybe moving up very, very slightly, but it's range bound. That's Bitcoin. Then going to Ethereum, again, a range. This one going from just below 3,000 to below here 1,800 is the bottom, ranging in the middle of the range. Litecoin, here it is too, ranging around about 200, the round number, and below us here at 120, ranging and at the lower end of the range of this one here. So none of these very attractive unless they break out of the range. We've got very clear points where it's either breaking up, therefore having a big, big wide base, or breaking down and having a big, big ceiling on its move. But there's no real, to me anyway, indication of which side it's going to break out of. The Bollinger Bands are narrowing up in all three cases. That means that the sort of volatility has dropped. I suppose that's telling us what we already know, but it's not squeezing. That doesn't tell us, that tells us we're probably not making the breakout anytime soon. So more sideways movement is indicated. Now, very interesting, silver and gold. We've got a message here. I'll show you first of all the silver-gold, the gold-silver ratio. So we've been flat for a long, long period of time. Let me go to the weekly chart, flat. But it does look as though that is changing. On the daily chart here, we've broken up on the ratio, that broken through these highs here at 69, and we're above it. So gold is preferable to silver. And then when we look at the absolute charts, we'll see that there. So gold, the chart, we've got this low, lower low, low, higher low on here, putting in a sort of intermediate term bottom in here. We had a nice couple of weeks there, and I think there's more to go on this because the resistance doesn't come in until about 1,870 there. So between 1,800 to the next $70 hasn't got a lot of friction in it, and it should continue to advance. The MACD is positive, the RSI is looking good, the ADX is at 30, so we've got a decent trend in play here. The Bollinger Bands, that looks very like a squeeze, so that's a forecast of impending volatility break. Doesn't tell you whether it's up or down. My hope is that it will be up and it will make that break quite quickly because of the lack of resistance towards 1870. But we can't say anything like that about silver. The silver is still consolidating sideways. It's below its resistance here. It's in the middle of a channel, if you like. Here, the RSI is pretty flat. The MACD are very close together, moving sideways. It's all very flat, and sideways is the message. So we've got a clear message here: gold versus silver. Gold much more preferable to silver. Silver looks as though it'll move sideways. Gold looks as though it's ready to move higher. Brent crude last week had a dip, and then it looks as though it's recovering from the dip. So after this good long bull run with higher lows, we had a pullback. Pullback was rather brief, and it does look as though it's really already over. But it's very important to remember where we are in the big picture here. It's not at all surprising that we're having a hesitation, because this is a very important level. So I'm going to just bring in some more data here so you can see where we are. So we broke through the 2019 high here, and this and 2020, these two highs here, they've been broken, but we're flirting with this 2019 high here. So it's not a surprise that we're having some hesitation here, but wow, what a strong trend that we've got in play here, uptrend that we've got in play here. So if we can clear that, I call it the round number of 76, but if we can clear the 76 level, then we should be looking for a real shot at the 86 dollar 2018 high. And then if we go back, I just want to remind you, those of you that are too young to remember, this triangle here, and so this tumble that we had here, and how it was in free fall at this time. That means there's very little resistance on the way up, and I think that we would be back through $100 if we can clear that level there. That's of course a tall order, but we're doing the only stumbling block before it is exactly where we are now, and it is looking quite constructive. I think the pullback itself was quite modest in last week, and if that's it, then we should be ready to go. But let's see how this week turns out, or whether we put in more consolidation at the resistance level before we make a serious attempt to break it, or of course fail. But it does look more likely to break up than to fail. The trend is strong there. Okay, moving to the indices, and here I'm going to use the ADX as my guide, the MACD and the ADX as my guide to which is best. They're all going up, but which is best of them? So I'm not going to go in the order of best to worst. I'm just going to go in our normal order. We start here with the S&P. So S&P, wonderful bull market. Here, a little bit of a wobble at the end of the week, but shortened week as well, but turned up nicely, making new highs. Everything very strong about that. The MACD is positive. The weekly MACD is just about positive there. Just about positive, so not a strong bullish message on the weekly there. On the daily it is, and the ADX is 19. Just remember 19. Then let's go to the Nasdaq, and here we have the Nasdaq. At first glance, a similar picture with a little pullback at the end here. Let's look at the weekly chart. Well, the MACD is clearly positive and has been for a couple of weeks there. The daily has remained positive since the end of May, and that's very strong. And the ADX is 28 Remember, the ADX was only 19 on the S&P. So the ADX measurement tells you the strength of the trend. The trend is much stronger in the Nasdaq. The tech stocks are back in lead. We talked about that a few weeks ago, and that is clearly makes the Nasdaq the most attractive. Let's go to the German 30, and here we've got a rather flat pattern. So let's go to the weekly firstly. The MACD is negative in this. It's not bullish at all. It's turned negative. The daily MACD is also negative, and the ADX is only 20. The Nasdaq is 28. It's a very weak trend. And then the FTSE, the UK 100, again, very flat picture here, but let's look at the weekly here. Now there's an additional alarming thing. The other ones up till now were all making new highs, but what is the FTSE doing? It's approaching, and I warned about this, a very, very significant wall of resistance. So from exactly where we are now, 7,200, let's say, upwards, up to 7,800 is a wall of resistance. It's going to be very hard to make progress upwards, the FTSE, and particularly if we're bullish of the of sterling. You know, with so many dollar earners in the FTSE 100, the MACD is negative in the weekly chart. The daily chart, the MACD is negative, so it's like the German 30, and the ADX is 18, and this is this is a very unattractive chart. So in the order of things, from worst to best, if you like, is the FTSE worst, the German, which had its moment there. Yes, the German. No, sorry, the next one is the S&P. Then, which has got 19 for its ADX, got the German 30 is at 21, but I don't like it because the MACD is negative in it. A clear winner is the Tech 100 with an ADX of 28, weekly and daily MACDs positive, and only blue sky above us. And so there's a clear message of where you should be in this bull run, in global bull run in stock indices. All right, Dan, do we have any?
Actually,
questions?
Trevor, yes, we do. We've got a question here. It's crypto related. Let me just read it out to you. He says, hi, I have a question. This is from Ali Reza. Thank you for your question. He says, hi, I have a question. Do you think that the crypto market is going to be bullish or bearish this week?
I think, as I said, I think it's going to be flat.
Yeah, perhaps a late arrival.
Yeah. So they're all in ranges, and they're all pretty well in the middle of the range. The Litecoin is at the lower end of the range, and that doesn't look as though there's energy in the market, which I would look to find from. No, am I right to say that or wrong? Just one second. Let me just bring the chart up. Let's take, for example, Ethereum. Yes, no energy here because the Bollinger Bands are narrowing up. The volatility is declining. Bitcoin, let me just check it. Here's the Bollinger Bands, more or less parallel and narrow, low volatility. If it's going to make a run at something, it needs some energy in it, and that's a measure of the energies, the bandwidth of the Bollinger Bands. So I think that, sorry, that's the futures contract, by the way, not Bitcoin itself. There's Bitcoin itself. And so there's the range, and we're in the middle of it there. So I think it's going to go sideways. That was not one of your alternatives, but and may not be the one that you hope for, but that's what it looks like to me.
So in answer to your question, neither.
Yes, exactly. There is a third.
Right. Okay. And that's it, Trevor.
Okay.
No further questions. Well, thank you very much for attending, everyone. Please join us again next week, same time, same place. And don't forget that we're posting this webinar to our YouTube channel in a few hours or so time. So if you came later and you want to watch from the beginning, or if you just like to watch the whole thing again, or head over to our channel and don't forget to subscribe and click on the bell to get notified. Okay, anything else to add, Trevor?
No, not really. Just make sure you realize that the dollar message is split and that you're pairing off the right things in that. The stock indices are all bullish, but there are clear preferable things to be in there. Nasdaq is the one, and then the gold, silver. We're getting a clear message in that as well. That gold is attractive and silver is looking like it's ranging, and so the gold silver ratio should improve, and it's gold which excites us and silver doesn't excite us. And in the cryptos, I might be wrong, because the cryptos, moves can come from anywhere, but from the charts it indicates more a week of sideways trading.
Okay, thanks Trevor. Thanks everyone. See you same time, same place next week. Thank you.
Thank you, Dan. Thanks everybody. May the trend be with you. Bye bye.
Bye now. Bye.